Stock market sudden growth. How to safely and profitably do bottom fishing for your favorite stocks. Today, I will reveal the secret MACD bottom fishing strategies exclusively used by master traders. Most people have used MACD, but few can really use it well. Price can be always cheap. But today, I would like to share an indicator that never cheats. This method was shared by a senior trader who continuously failed in the bottom fishing. But after he spent a year on research deeply on these indicators, then successfully covered all his losses from previous failures in just 8-month operatings. Today, I would like to share these special indicators that is the best and the most reliable indicator if you manage to use it accurately. It can give you the big profits. MACD is a trend following momentum indicators. It can be very useful while in the trends already formed, but it will be less effective when the trend is in the sideways or downtrends. There is many of MACD trading methods. Today, I will share you about two among of them, which is the safer points to operate, which is the above zero axis strategies. Methods 1. Go cross above zero axis, usually in the uptrends. One mountain is higher than the next. Golden cross is then entry point. If there is a gold cross closest to zero axis is much better. We refer on the Tesla charts. There are 4 gold cross above the zero axis. Entry of his gold cross is a much better entry or average out positions. If you are the swing traders, you may enter. There is the big profits period you can generate from the July 2021 until November 2021. The profits of total is about 85%. If the time is to take notes now, that is much important than entry point in the trading. Who are master in the exit point is only can be the finals winners. ACD methods 2. Find highest exit point using divergence strategies. We take the supply and the demand logic in the markets. If demands increase, it is logical to increase the supply to achieve a balance between supply and demands. If the supply increase but the demand is decreased, there is something wrong and there is in the divergence scenario. We are according to the charts below. We can notice that the MACD signals line form a lower high. At the same time, the price forming higher high. This means that currently supply is much higher than the demand scenario. The corrections down on the stock value or the price is necessary. After exits on the dead close zone, the stock price fall almost 20%. Here is an additional method to identify the divergence. We refer to these charts where the stock price is continuously rising, but the histogram of is getting shorter and shorter. In this scenario, we can notice that the uptrending energy have become weaker and weaker. As the exit point appear on the dead close, the stock price go into the big corrections period. Within just the 30 days is fall almost 35%. These two MACD basics operation strategies successfully assist this of the senior trader gains profits more than 65% just within 4 months. In the next video sharing, I will share the advanced MACD usage for the bottom fishing in the stock markets. Would like to attend these classes? Please do the subscribe on these channels. I see you again in the next video. Bye bye.